And now from Morgan Stanley, Ellen Zentner joins us. Ellen, I want to go into the data and all that, but I want to go back to early Ellen Zentner, which only you and I were around for.
I'm coming in hot, just like payrolls. I'm coming in hot.
You made your name analyzing the American consumer. To me, that was the great era of economics in the past 18 months. Paul and I opened the show with the booming Delta Airlines. What does Morgan Stanley see is the state of the American consumer given this bang-on jobs report?
Look, not a lot has changed, right? People are still spending on services, not so much on goods. Travel, and especially the wealthy consumers. And so not a whole lot has changed. In this report, we see it too, right? Goods in the job sector are down, spending on goods not as strong as services. You know, goods are going to be impacted by tariffs more so than services. And so we're going to continue to see that shift between services gaining share at the expense of goods. But this is a more of same, good jobs market. And yes, there was a lot of rebound in this number from hurricanes and strike in the last month, and that was really the guess on how much of that payback we would get in this number. It's still the story that we've got some ever so gradual softening of the labor market. But man, it's gradual.
So, I mean, how do you think the Federal Reserve is going to kind of ingest this data today?
I don't know what number would have gotten them to change their thoughts about being on hold here. I think in December, I was more in the camp that the language that they used, the boilerplate language that they used, basically was a hard pause. And now with the January meeting, it's the housekeeping meeting where you have a lot of shifts and voters come in and out. You've got even more of a divergence between doves and hawks on the Fed, and you've got uncertainty around fiscal policy, and uncertainty means policy paralysis. Just on hold here, and we'll let you know when it's time to move again.
In the blur of this show, and trust me, folks, there's like 20 people helping me and Paul get through this every morning. I remember little things, whispers of things from weeks ago. And one of them is an Ellen Zentner whisper. You were heated at the polarity of consumption in America and your definition of the haves. Define the Ellen Zentner haves in America enjoying a 4.1% unemployment rate.
So the unemployment rate, we saw the underemployment rate also come down.
7.5%.
So we're getting strength all the way down to the most underserved in the labor market. But that bifurcation of the consumer, the top two income quintiles is more than 60% of all consumer spending. And
1/5 of America is 60% of consumption.
2/5. 1/5
Excuse
is
me, 2/5.
1/5 is 45%.
I just got a C- in Zentner economics.
Yeah, well,
okay.
I'm here to keep you honest, Tom.
There we go.
But Paul, this is incredible.
It is.
2/5, right? 40%?
Nailed it.
Am I close?
More than 60%.
Lisa, help me here.
You're just not getting this right, Tom. It's too many numbers.
Slide rule here.
It's a whole lot. Let's just say that.
A whole lot. Yeah,
it's
there's
a whole
my
lot.
economics.
So how does that inform kind of your view of kind of investment opportunities out there? Because it seems like the economy, whether you're looking at labor, whether you're looking at the consumer, whether you're looking at the Fed, things seem to be in pretty decent shape out there, right?
Yeah, things are pretty decent shape. I think that it means it's going to be higher for longer interest rates. It doesn't mean the Fed's not going to cut this year, and I certainly wouldn't put bets that they're going to hike based on this report, right? I would still put a very low probability that they hike at some point this year. But what you've got to do as a policymaker, if you're doing prudent policymaking, even when we start to get a flurry of executive orders after January 20th, you want to look through price increases from tariffs, because on the other side of that, you get a hit to aggregate demand. When that comes through, the Fed could still be cutting, but later this year.
Yeah, tech team Seth Carpenter and Ellen Zentner is the way to go at Morgan Stanley. Ellen, this headline just out, and I usually don't do this, but it gets to what your meetings are going to be like at Morgan Stanley today. Traders shift full pricing of next Fed rate cut to October.
Wow.
That's wow. Okay, for you, that's wow.
To me, that's a wow. That's a wow. Because I have been, one of the scenarios out there is that the Fed's going to cut, and maybe they cut just as much as they're saying they might cut this year, but it comes later. later because they really have to see what policies come out of the administration and if they do hit demand later on.
Okay, I know you're not in speaking terms of Seth Carpenter, but the basic idea here is you have a twisted economics because you're Texas. You are hardwired.
I'm real.
The entrepreneur. No, I'm serious. You're hardwired the entrepreneurial nature of America. To you, Seth Carpenter, Richard Berner, Steve Roach, and everyone else in the game, do we underestimate the entrepreneurial spirit of, say, someone like Michael Dell?
I don't know if we underestimate the entrepreneurial spirit, but it was gangbusters during COVID when people were able to have a rethink and take advantage of excess income, low interest rates, and we saw a proliferation of business startups. And that's always productive, fraudy for the economy. It's just a positive all the way around. Now we're seeing productivity gains from the labor market having been so tight for so long that businesses sought efficiencies, and that's coming through now. That's not even AI yet. So American exceptionalism is real. It's very real.
Did you change your outlook? Will you change your outlook now that we are having a new administration come in and, a kind of more solid Republican Congress?
No. I think that pick your baseline. I mean, none of us know what's going to come out of the administration after January 20th. And so whatever baseline you have, it's going to be wrong.
Yep.
So you just have a lot of scenarios, and one of those scenarios will be sort of in the pocket of what we get.
What does it mean for the markets and for the stock market? I mean, it's away from your remit as chief economic strategist. I love this. Global head of Thematic.
Sure.
Her job is to fix the Dallas Cowboys. What does it mean for the stock market? If you're sitting down with Lisa Shallot, what do you tell her?
Yeah, so Lisa and I are tied at the hip now, both on the Global Investment Committee at Morgan Stanley. Look, I wouldn't be investing in aggregate indexes here because policies are going to come fast and furious, and they're going to affect certain pockets of the market. So you want to be in real assets, you want to be in energy, you want to be in commodities.
She's so Texas.
You want to be.
Well, she's got a game tonight.
I'll throw a yeehaw in there. Oh yes, and the horns are playing today.
So what are your plans for January?
Of course, I'm watching Landman.
Okay,
yes.
Well, what do you think? Sweeney's all over
into
this.
it.
I mean, is it an
Well,
accurate
I don't know
picture?
a lot about the patch. I'm probably learning just as much as everybody else. It's not a whole lot going on in West Texas.
But you're plus on oil and energy.
Oil,
from an American GDP
energy,
standpoint.
REITs, healthcare, financials, because it's going to be higher for longer interest rates. And so there are plenty of pockets of investment. Right now, we're very, very big on thematic investing, AI and defense, and specifically software. So there are pockets and there are things that we're excited about this year. And you want to avoid things that are super impacted by the volatility around what policies could come out of the administration.
Ellen, thank you. Ellen Zentner with us with Morgan Stanley.